Talk about what we should expect from Fed members in Jackson Hole later this week. Joining us now is John Taylor, Senior Fellow at the Hoover Institution and Economics Professor at Stanford. He's a former Undersecretary for International Affairs at the Treasury Department. It's been a while since we've seen you. Professor, good to have you on.
Good to be here. Good to be here.
We do talk about you. I don't know whether your ears burn. We especially recently with the Taylor rule or just a rules-based system for the Fed. Every couple of years, it seems like we start talking about that again, either after a perceived mistake by the Fed or just the notion that flying by the seat of your pants might not be the best way to run the world's largest economy. But others have argued that some intuition might be just what is needed in these changing times. Would you say the Fed's orchestrated this pretty well, navigated through this pretty well if we do indeed have a soft landing?
I think they got behind the curve a couple of years ago and a little catch up. They're okay where they are now, but they got to raise it and lower it a little bit. That's for sure. They're okay at this point, but remember they were very low before, and that was really a problem. We had to get the interest rate to 9.1%, and so we're now in the realm of possibilities.
What would the Taylor rule have dictated when they stayed too long at zero? How would it have solved that? Would it have been unable to do that if the Taylor rule were in place?
It would be an ideal way to go about it. It maybe would have been 3%, 4% at this point. You have the target for inflation rate, which is universal now, 2%. It's discussed by the Fed, by the chair, and by others. And so that's really where the focus is. And then you got a upper real rate above that to some extent, could be 4%. But it really remains to be seen how far above it will be. But I think 4.5%, 5% is where we're going.
And what do you expect to hear from Chairman Powell in Jackson Hole?
I expect he'll be in the mode of somewhat lowering rates. He's been high for a while at this point. He's been supportive of that, but we'll see. It seems to me it's most likely to be a little bit lower, and we'll have to see. It's very important at this point to take the global situation behind us and think of what's happening. I heard earlier discussion of China and Russia and other parts of the world. Don't forget Africa. Don't forget Latin America. And so there's a lot going on around the world, which we have to get to 2%. That 2% is a goal which the Fed has established and other central banks have established. That would be ideal if we move to 2%. That's the Taylor rule.
Do you worry about the independence of the Fed and maintaining that through administrations?
I'm not really concerned about that at all at this point. People could be different, but it seems to me Jay Powell's got the right mode at this point, and he's in charge. He's not the only person, of course. There's a whole committee, and there's other people commenting like me and you, and so there's a lot of things that are going on. But I think it's very important to put this in international context and don't limit it just to the United States. It's one of the countries in the world that needs to be focused on.
Do you think the President of the United States should have a say in where interest rates are set?
I think this is really we've got accustomed to the notion that the Fed has the decision, the chair and the others members of the committee. They listen to other countries, that's for sure, and they listen to the president. But I think the main thing is at the hands of the Federal Open Market Committee, and they didn't do a good job 2.5 years ago. They're pretty much where they should be now, a little bit lower. I think it'd be ideal, but it's really the question of where are we going to be going forward? And I think it's got to be lower at this point. Don't forget, we want a higher growth rate. We don't want this 2% growth rate. We want a higher growth rate in the United States.
Right. Okay, they tell me we got to wrap up. I was going to ask you if there is a way, do we need an additional law in the books about colluding or about taking advantage of market conditions to gouge or to game the system? Do you think we need, did that play into corporate greed play into the recent bout we had with high inflation? Is that a new law we need on the books, you think?
No, I don't think it's new. I think basically what happened a couple of years ago was the Fed got off track. And they're now pretty much back on track. We forget about that. Should be more mention of that. I mentioned a lot myself. So I think that's the first thing. But then we have the rest of the world. Don't forget, this is a global economy.
Yep.
And what's happening in Europe, what's happening in other parts of the world are very important. So we need to put that in the right context. I couldn't emphasize more that this is more of a global situation. We need a tailor rule for not just the United States, but for other countries as well. And other countries are adopting it as well.